Hi everyone, welcome back to the USCPA classes for financial accounting and reporting. In this particular video, I'll be walking you through in detail about equity, and this is part 1. In this part, we'll be covering overview of equity, classification of equity, issuance of stock and treasury stock. Then after, you can go through the part 2, which is coming just after this video. There we'll be covering remaining topic of equity. So let's dive into to start with part 1 of equity. So let me jump into it. Yeah. So in equity, we'll be having we'll be covering these 7 things once again. Yeah, in equity, we'll be covering classification, issuance, treasury stock transaction, dividend, other topic of equity, and then non-governmental, not for profit, net assets, and the partnership. So these are the 7 topics we'll be covering today. So in equity, like classifications mean, like you all have seen like financial statement. Maybe I can open that, which I have shared with you guys. If you see this, then GM. So if you see the equity, let me take it directly. In the financial statement, equity net assets, consolidated statement. If you see, this is like kind of presentation of equity statement, right? You have common stock, you have additional paid in capital, you have retained earning, you have accumulated other comprehensive loss, and then income or loss, right? And then if there is any non-controlling interest. So like generally in the financial statement, you will see these kind of classification and these kind of information. So if you see like information, how things are following, so you have like opening balance, then if there is any impact of any change in accounting standard, right? And then net income, other comprehensive income, any purchase, or you can say buyback of shares, or maybe treasury stocks, right? That you need to consider. Any issuance to subsidiary, stock-based compensation, cash dividend, or any dividend to the non-controlling, or any other transaction you have. So such kind of movement you will see in the equity statement, and that will cover your common stock, additional paid in capital, retained earning, accumulated or other comprehensive income or losses, and then non-controlling interest to finally summing up to the total equity. So there, if you see, there is 2 years of movement. Sorry, 3-year movement from 2018 to 19, 19 to 20, right? So it's starting from January 18, it will go to December 18, then from December 18 to December 19, and finally from December 19 to December 20. So 3 year of movement will be showing, but what all things we cover generally is all kind of shares, right? What all comes under the equity share. So if you see in the classification, you'll be covering all these things like your equities, your additional paid in capital, retained earning, accumulated comprehensive income or loss, any capital stock, donated stock, unrealized capital, or any such treasury stock. So all those things you'll be covering in the classification part. We'll be discussing one by one more in detail. Second important thing we'll be covering under the equity topic is issuance of stock, right? How it looks like issuance of stock. If you see issuance uh, issuance of subsidiary preferred common stock, so there is no much. Note number 20. Yep, there you go. So here you see Note number 20, in which they have mentioned specifically preferred and common stock. We have 2 billion share of preferred stock and 5 billion share of the common stock authorized for issuance at December this and this. And we have no share of preferred stock, and 1.4 billion share of the common stock has been issued and outstanding. So this kind of, like information has been given into it. And then if you see, let me see, like Microsoft Financial. Here also you will see there is a issuance of stock and how that has been presented into the financial statement. There you go. It's a financial statement. Here you have comprehensive income statement. There you have balance sheet. Here in equity statement, you will see common stock and parent capital authorized 24,000 and this. So if you do common stock, if you do, if you just find this, there you go. So if you see here, the common stock opening balance, common stock issued. Can you see this? Like common stock issued, common stock purchase, and stock-based compensation and other expenses. So these kind of disclosure is being needed in the financial statement for the common stock which you have issued during the year, right? So for the issuance of stock, what all information you need to disclose in the financial statement, that we will be discussing. And then after, third one is treasury stock. Have you heard about this term, treasury stock? I think we have discussed in very first class about treasury stock. Do you remember what is treasury stock? Hmm? Hello?
Sir, can't recall, sir.
Gurmehar, Prashant, Kashish,
सर
do you?
आपने जैसे ये बताया था कि जैसे इन यूएस वी कॉल कंपनी बाय बैक देयर ओन शेयर्स, तो सर उसी को ही बोलते हैं आई गेस.
Yes, absolutely true. So when you are, like in India, we say buyback of shares, but in US we call treasury stock, the stock which company purchase from their own stock and keep it into authorized share capital. That is called treasury stock. So we'll be understanding the treasury stock transaction, and then after we'll be discussing dividend and dividends, stock splits, right? So category of dividend, cash dividend, non-cash dividend, stock dividend, all those things we'll be studying. And stock split, what is stock split, those things we'll be discussing. And then fifth topic is other equity topics, where we'll see like restructuring of the capital basically. Then we have non-governmental and not-for-profit net asset, that also for NPO, not-for-profit organization. Instead of equity statement, it is called net asset statement, right? So how to prepare the net asset statement, or how to disclose, what all disclosures are being required for not-for-profit organization for the net assets situation, that will be covering. And last one is the partnership. So the partnership capital, drawings, and net capital, all those things, how we need to disclose, those all will be covering. So in equity, broadly, if you see, we'll be covering classification, issuance of stock, treasury stock transaction, dividend, stock splits, other miscellaneous topic, and then we are jumping into the non-governmental or not-for-profit net assets, and for the partnership, their capital account of the partnership. So these all 7 things we'll be covering in this class today. So first one, jumping onto the classification. So classification of equity. So equity is being classified into 8 categories. First one is shareholder equity. That is normally excess of total assets over the total liability. If you see in the balance sheet, me take you back to the balance sheet. One second. If you go back to the balance sheet, you will see what is total equity. Total equity is net assets minus net liability. One second. Cash flow statement. Yeah, there you go. So if you see what is net equity, what is equity is being total assets. So if you see this is the financial statement, you have total asset of $235,194 million, right? And there the other side, like if you remember the T account when you are preparing for the financial statement, left hand side you have all the liabilities and the right hand side you have all the assets, right? So same way now the presentation is top to down, right? So in a one pager vertical presentation nowadays we are doing, right? In this, if you see the assets are being coming on the first side, and then the second side is coming all the liabilities including equity. So what is the equity over here is total assets minus total liability is your equity statement. So that's what it means is if you see this total, if you see this total is total assets minus total liability, right? Are you guys agree with me?
Yes, sir.
Kashish, Prashant, right?
Yes.
That's what it means is shareholder equity is equal to excess of total assets over the total liability. Second classification is capital stock. So capital stock, like we were discussing here, so the common stock basically. Capital stock is common stock. And then additional paid in capital. So there would be some additional paid in capital which we were discussing in the equity statement. So I'll try to correlate all the theory with how it is actually look like. So if you see the next one is additional paid in capital. So your common stock, then your additional paid in capital, and then if there is any donated capital. Have you ever heard this term before? Donated capital. Have you heard Section 8 company in India?
NGOs.
Yeah. So in India, if you remember, there are you can make a trust, you can make a society, or you can make a Section 8 company also, right? In the Section 8 company, people can donate and make the capital contribution, and that can be considered as a donated capital. Same way in US also for the company who are doing more of like social services, right? They can also have a donated capital, which is like the capital contribution made by the donor. Make sense?
Yes, sir.
Next one is retained earning. What is retained earning?
The retained earning is basically the increase or the profits which have been retained and not distributed by the company, or we can say that increase in the net assets arising from the operations is retained earnings.
Yep. Prashant, Kashish, anything you would like to add?
सर डोनेटेड कैपिटल का
No. Retained earning. I'm at retained earning. What is retained earning? Gurmeher, Prashant.
So retained earning is basically, as you mentioned already, the earnings which we actually retain as such, like from previous year we have a balance. Now this year we earned a revenue, like a profit, and we distributed among the shareholders. The amount which has been retained will be uh, included in that the last year's retained earning balance.
Mm-hmm.
So that becomes a part of equity, basically.
So if you see over here, this is purely your retained earning. So what all coming over here? So you have opening balance. Then if there is any change in accounting standard, that may be impacting your retained earnings. So you remember, like when we have studied ASC 606, 842, 326, all the new accounting standard codification when we were studying. So at that point of time, there were two kind of impact which the company can do the analysis. One was full retrospective and one was modified retrospective impact, right? In a full retrospective, the impact will go to the very first opening retained earning, and in the modified retrospective, the impact will go into the opening retained earning of the financial statement which you are showing, right? So here the company has opted modified retained earning for the adoption of new accounting standard, and that has resulted into the loss of $1046 million, right? And that has been adjusted over here in the opening retained earning. Then after you see the net income, from where this net income is coming, from the income statement, right? Then after, if you see purchase of common stock, they have purchased certain common stock from the retained earning. That means the earning which they have, the savings they have from the overall business, from that they have purchased certain stocks, which is like buyback of stock, or you can say treasury stock. And then they have also issued like dividend of $2144 million. So that also being adjusted, and then any other adjustment. So total, the closing would be $22,322 million of the retained earning. So what all comes under the retained earning? Your any change in the accounting standard impact, right? Your current year profits, right? Your dividend paid, and any buyback of the share from the retained earning. Make sense? Yes, no?
Yes, sir. Yes, sir.
Huh?
सर
Ayush?
ये परचेज ऑफ कॉमन स्टॉक क्यों आ रहा है इसमें
Like,
रिटेन
no, like when you purchase a common stock, from where do you pay the money? So you remove, right?
रिड्यूस करके दिखा रहा था बेसिकली सर
So you first pay out from the retained earning, and then if retained earning is short, then there would be any other thing you look for.
ओके ओके और एक ही लास्ट में अदर्स आ रहा है जैसे इसमें व्हाट कैन बी
Others
द
may be like foreign currency adjustment or something like that.
ठीक है ओके डन डन ठीक है
Right. So that is all comes under the retained earning. Then next is unrealized capital. So unrealized capital mean the shares has been issued to shareholders, but you have not received the money. So in that case of scenario, there are certain unrealized capital, that is amount still need to be recovered from the shareholder, right? So there might be a possibility that you have you have issued a share capital, but you have not received the cash from them. So that if there is any such situation, then it will come in unrealized share capital. The next one.
वन थिंग सॉरी बुक में ना अनरियलाइज्ड कैपिटल का डिफरेंट एग्जांपल है मतलब आई हैव नॉट हर्ड ऑफ इट अनरियलाइज्ड कैपिटल रिजल्ट्स फ्रॉम राइट अप ऑफ एसेट्स अबव कॉस्ट व्हाट डज दैट मीन
1 second, let me open it. This unrealized capital result from write up of assets above the cost, except in limited situations. Such write-ups are not in accordance with the GAAP. Accordingly, they are seldom found in financial statement. The unrealized loss from decline in value for non-current marketable equity security is an example. Non-current marketable equity security is an example of negative unrealized cash that may be found in the shareholder equity section. So unrealized capital mean your assets are being overstated. What is like equity? Equity is the total assets minus the liability. Like what they are saying, you have certain assets which are overvalued. So if assets are being overvalued, that means your net asset position, or you can say equity, is also being overvalued, right? So when you do
Okay.
the reduction, or you can say when you do the fair valuation of those assets, your equity balance will also go down. So that is like kind of unrealized capital. So there are two ways to look at it. One is your assets which are being overstated. If you are impairing them, so that will be resulting into the losses, and that losses will go into the retained earning, right? And it will reduce your overall capital also, right?
Right, right.
The other way also, unrealized capital is where like you have issued the share capital. Like it's very traditional definition which I'm sharing, because nowadays like almost everything in the demat format. But in the earlier days, when you have issued the capital but you have not realized the money, so you have been considered those share capital also been into the unrealized capital, or the capital which is being issued for which amount is still due.
Yes, sir. Okay, sir. Done.
So both can be considered over here. Okay, so next one is accumulated other comprehensive income. Now taking you back to the financial statement, accumulated other comprehensive income. So if you see, this is accumulated, one second, this is your accumulated other comprehensive income. So what all generally come in accumulated other comprehensive income or losses is your opening balances, any impact on account of change in accounting standard, and then you have like loss of other comprehensive income from the current year and the total balance. But here let's go to the other comprehensive income statement, which is below the income statement. So this is your assets. Yeah. So here is the comprehensive income. Here you will see there are five kind of transaction which generally comes under the OCI, which include foreign currency translation adjustment, defined benefit plan, and there are a couple of like two or three standard items which comes under the OCI. So if the impact of those five kind of transaction is negative, then it is loss, or the impact is positive, then it will be like income. But generally in OCI we park those income and expenses which are on account of outside environment of the businesses, which is not on account of the business transaction or business activity. For example, like this foreign currency translation. So foreign currency fluctuation is generally not in the hand of the business, right? It is market that drive the balances, or you can say the change in the rate of the foreign currencies. It's not the company who drive the change in the balance. So generally those kind of incomes or expenditure which is resulting from the items, or you can say areas which is not in the control of the business's owner, then those kind of income and expenditure are generally being parked into the other comprehensive income, unless and until it is actually get realized, and then it is being released from OCI and it moves to the actual income statement. And once it move to the income statement, it will impact the retained earning, because net profit from the income statement go into the retained earning. Make sense?
Yes, sir.
Yes, sir.
And then last one is treasury stock, or which we have discussed like a buyback of the stock. So treasury stock, for example, the company has issued, let's say 1 million share of, let's say $100 each. That means they have a share capital of $1 billion. And now the company wants to buy back certain share. Let's assume out of 1 million, they wants to buy back 100,000 shares, right? And the 100,000 shares, let's assume they are planning to buy back at 150. So for which, how much money is being required? 150 minus $100,000 is hmm?
It is $50,000.
No, Let me do the math for you. What I'm saying, company has share capital, authorized and issued share capital 1 million shares at the rate of $100 each. How much is it? How much is it? $1 billion?
$1 billion. Right.
Right
Yes, sir.
now, the company is doing what you can say. Let's assume 100,000 at the rate of $150. So how much money they will be needing? How much money they will be needing?
पूरा ही चाहिए सर 1 lakh into 150 is $150,000. 1.5 million.
Right? And this $1.5 million, this 5 million will go to the retained earning. Sorry,
Right.
right? And 1 million will adjust from the share capital.
Share capital. Right. Yes.
Right, everyone agree?
Correct. Agreed.
So after this, company do have
तो ये लास्ट वाला एक बार फिर से बोलना, मैं थोड़ा
one second.
समझा नहीं।
One second. After this, issued and paid up share capital of yes. So one by one. So before buyback, before treasury stock, company has authorized and issued share capital of 1 million shares at the rate of $100 each, right? So 1 million was the share and the $100 each. So 1 billion was the share capital, right? And during the year, the company has buyback 100,000 shares of at the rate of 150 each. So the share capital which is being authorized and issued $1 million minus 100,000. So remaining would be 900,000 would be the share issued. And this 100,000 share which they have purchased or buyback at 150. So the total cash outflow is 150,000, $15 million, right? In this $15 million, this $10 million will go to the share capital. $10 million will go to the share capital and $5 million will go to the retained earning, right? This one is just from share capital and this one will adjust from retained earning. Make sense?
Adjusted means it will be reduced, right?
It will reduce the retained earning, yes.
Okay.
So this will reduce the share capital, and this will reduce the retained earning, right? Now, after this event, this is how your financial statement, equity statement will look like. So you have authorized capital of $1 million of 100 each, that is $1 billion, but you have issued and paid up capital of $900,000 at 100 each, which is $90 million, and you have a treasury stock of $100,000 of 100 each, which is $10 million. This is how your new financial statement will looks like, or the presentation in your new financial statement will looks like. Make sense? Gurmihar, Kashish,
Yes, sir. Yes, sir.
everyone?
Yes, sir.
Yeah. So this is about the classification. So these are 8 category of classification you will see in your financial statement. Now coming to the second point, which is issuance of stock. So issuance of stock, it can be your preferred stock, or it can be your common stock, or it can be stock subscription. So what is preferred stock? What is preferred stock? You remember from your school days or college days?
The shareholders who do not have a participation right in the
Voting
participation
right.
rights, right?
Mhm.
So those are the preference shares. They have a very fixed, and they are preferred over equity in terms of when
Repayment.
capital is to be paid back to the shareholders.
As well as dividend.
Dividend is fixed in most cases, which is to be paid before it is paid to the equity shareholders.
Anything else? Anyone else would like
And
to add?
their interest, like their
No
return is
interest. No interest.
no
It's dividend.
return, basically return is comparatively less as compared to other stocks, category of
No,
stocks.
no, 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 no.
It's not like that.
So not like that. Prashant, what's your understanding of preferred stock? Kashish, what about you? Are you guys here?
Yes, sir.
What is your understanding of preferred stock?
So no idea इसका तो.
No idea. Prashant? Prashant, any idea what is preferred stock? Okay, so yeah, I know like Ayush has shared, so that's more or less he covered everything, but I'll quickly reiterate, like preferred stock is basically the equity which do not have kind of voting right, or which cannot participate in the decision making of the shareholder, right? But they will generally have preference on the dividend, and their dividends are generally fixed. And at the same time, they also have a preference for the recovery of their money over the common stock or over the equity. So preferred stock is something in between the debt and the equity. So it is not like debt for which like interest is being mandatory, but it's not like equity which is like shareholder fund and they take the participation in decision making. So preferred stock generally lies in between the equity and the debt, which are like interest bearing component. And based on like practical experience, generally preferred stock in dividend is slightly less than the interest rate of the you can say debentures or maybe the loans. But in terms of return, if I would say, is being less risky. Equity is more risky because their number for returning of the capital would come at the end, whereas the preferred shareholder do have certain preferences to recover their money. And practical experience generally, like which I've seen in multiple companies, is like preferred stock. There are most of the time are convertible preferred stock, for which certain equity, certain deed has been given in which like the options to grant the equity or option to convert those preferred stock into the equity is being given, right? So if I summarize things like preferred stock, very layman language, if I say, is in between the actual equity stock and the debt. So it's not like debt which you need to mandatorily pay, or it's not like you can say interest on debt for which you need to which for which you are legally bound to pay. And preferred stock also do not have, you can say, the right in the equity, or you can say right in taking the decision, but they provide the capital which is slightly secure than the equity. Hence, the risk is slightly less. Hence, the return on the preferred stock, or you can say dividend on the preferred stock, is slightly less than the normal equity, which is like market experience says. And the preferred stock can be of cumulative and non-cumulative. Cumulative mean if you have not earned the income in current year, but the dividend is being due, and you can pay the dividend in following year along with the following year dividend, right? For example, in 2022 you have earned no income, right? You do not have money to pay dividend, and you are not paying any dividend to the equity share capital. So hence in this year you can pass a resolution, the dividend of the preferred stock would be accumulated and will be paid in the future along with the next year dividend, right? That possibility or flexibility is being there. So those kind of preferred share are being called cumulative preferred share, on which dividend is being accumulated period over period and will be paid according to the terms agreed with the preferred shareholder. What is non-cumulative preference share? In which dividend is do not accumulate for the future period, and you have to mandatorily pay the dividend. That is called non-cumulative preferred stock. Any doubt or anything need more clarification? What is preferred stock?
No, sir, clear.
Prashant, Kashish?
सर ये मतलब ये क्यूमुलेटिव में सर हम 2 ईयर का ही टर्म लेते हैं, मतलब 1 साल तो हमने कैरी ऑन कर
No,
दिया.
no, it can be like 5 year, 10 year. It depends on like terms agreed between the company and the preferred shareholder,
सर ये
management
तो
and the preferred shareholder.
इनिशियली ही हमें डिक्लेयर करना पड़ेगा ना जब ये होगा.
Yes, 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 yes. So that should be in your original shareholder agreement. You need to mention that.
ओके ओके. मेरे को लगा सर जैसे एंड ईयर में जैसे डिविडेंड देने की बारी है तो फिर एक्सटेंड कर दिया, वैसे करते करते.
No, there might be a possibility, but that should be passed through the shareholder resolution.
ओके ओके.
So that can also be possible, but it required the shareholder resolution.
Got it.
You know, like at the beginning of the year, you might have estimated certain profits out of which you can be, you would be in a position to pay dividend, but there might be some uncertainty happen and you have not earned the profit. If you have not earned the profit, from where do you pay the dividend, right? So there might be a possibility like you take a approval from the shareholder by passing a shareholder resolution that dividend is being deferred to or accumulate to the next year.
Got it. Clear.
Second is common stock. What is common stock?
Sir, equity shares.
Equity share, absolutely right. So, what is equity share?
Sir, who have voting rights.
Who have?
Shareholders who have voting rights in the company. So basically, everything that is remaining after reducing liabilities from the assets and also after removing preference shares as equity stock.
Yeah, absolutely right. Kashish, Prashant, Gurmehar, what's your thought? What is common stock?
तो मेरे ख्याल से सिर्फ वही डिफरेंस है कि इसमें वोटिंग राइट्स है, इसमें नहीं है, बाकी तो सर.
Yeah, so common stock is basically your owner fund, right? So owner has made certain investment in the company for making and running the company, right? Building the and running the company. That funds are being generally called equity share capital or common stock. And nowadays you might have seen like the people are diluting their equity in the startups, right? So in that the investor generally purchase this common stock for which they pay the respective valuation, and they also sometimes issue a convertible preference share also, which may be converted after 2 year, 3 year, or 5 year term, whatever is being agreed between both the parties. But common stock, in a very layman language, if I say, are those stock who has key decision taking authority for the businesses. And second important thing is their money is on the highest risk, because if you see any loan or debenture, those are generally mortgage against certain properties, right? If you see preferred stock, they also have preference at the time of repayment, as well as preference of the dividend, as well as they have opportunity to consider those dividend on a cumulative basis, so that if in current year you do not have profit, in future year if you have profit, then you can pay from that profit, right? Whereas common stock is being the very risky investment which like owner himself made into the business, and he will be receiving the money after repayment of to the all creditor, to all debenture, to all debt, and to the preferred stock. So generally risk is high, so return is also expected to be high on the common stock. There are two ways to do the valuation of the common stock. One is par value stock, that is share amount printed on the stock certificate. Second is no par stock, which is most of the state do not allow no par stock. However, many states require value to be assigned to the stock. Assigned value play the same role as the purchase value. So in US, you can issue the stock with par value, or you can issue the stock without par value also, right? But most common and prevalent are par value stock. What is par value? Have you heard this term before?
Yes, sir. The
What
face
is
value,
that?
the face value of the share, the
Face
actual value
value of
of
the
Yes,
share,
sir.
the amount which is being returned over the share. Like this share is of $100 each, right? So that $100 is being considered as the par value, which is being declared on the share certificate itself, right? And what is no par stock? There are certain states in US. How many states we have? 55, right? There are few states which also allow the company to issue the share even without the par value written on the share certificate. That is also being allowed in few states, but not very prevalent because it is not a healthy practice. In that case of scenario, how do you calculate the par value of the stock on which the value has not been mentioned? So most of the states do not allow the non-par value stock. However, many states require the value to be assigned to the stock, which is like how they assign the value play the how they assign the value is based on which the respective stock is being sold at the beginning of the or at the time of original issue of the stock. That is considered as the par value of the stock when no par value is being returned on the stock at the face itself. Right? Makes sense? What
yes,
is
sir.
common stock?
Yes,
Which is the owner fund, right? And it is highest risky amount which you yourself is being investing into the business. And there are two categories of the share capital. One is with par value, the second is without par value. They both are being allowed, but most prevalent is with par value, because without par value is being allowed only in very, very few cases. Right? Makes sense? Any
yes.
doubt here?
No.
Prashant, Akash,
No doubt.
Gurmihar?
Yes.
Yes.
Okay. Third one is stock subscription. Have you heard this term before? Stock subscription?
No, sir. I'm not right. So इंडिया में है ही नहीं शायद ये कॉन्सेप्ट है
Hmm?
इंडिया में है ही नहीं शायद ये कॉन्सेप्ट तो
No, there is.
है मतलब है
Hmm.
okay.
Yeah, we might have not experienced much.
हम्म,
Anyone else? Prashant,
योगेश
Kashish?
पढ़ के जो मेरे को समझ आ रहा है कि मतलब जो स्टॉक्स है इफ दे आर इशूड एट मे बी ऐसा नहीं हो सकता दे आर एट नॉट ओनली एट पार वैल्यू बट एट अ प्रीमियम एज वेल जो सब्सक्रिप्शन प्राइस होता है उस पूरे उसमें जब तक वो पूरा पैसा नहीं आ रहा है तब तक दे आर नॉट इशूइंग द स्टॉक मतलब
Mm-hmm.
पढ़ के तो यही समझ आ रहा है कि
No, it is like your EMI option, like
Ah,
every
हाँ
month
right.
you are depositing, and once you have sufficient amount, which is tying to the stock values, then they will issue the stock to you,
तो फिर
right?
उसमें like जैसे like the face value is for 10 rupees, right? Or
Hmm.
the investor is like paying 3 as a subscription,
Hmm.
and then rest 7 will be paid maybe next year and in the
Hmm.
subsequent years in
Hmm.
2 installments. So
Hmm.
उसमें सब्सक्रिप्शन पे लेने से फिर रिटर्न मिलता है इन्वेस्टर को ड्यूरिंग दैट टाइम ऑफ पेमेंट और वो
Hmm.
मिलेगा वो प्रोराटा बेसिस पे मिलेगा ऑन द बेसिस ऑफ सब्सक्रिप्शन पेड
Very, very good point. Very good point. Same way, like how we have ESOPs, right? What are ESOPs? That means the employee is serving over the period, and once he complete the services, after that he or she is getting the share of the company. Same the subscription model also go. So this is also kind of a retention policy of certain company in which they allow their employee to subscribe their share, and they will deduct certain amount from their salary, and after the year end, let's assume they have completed the service and they have done some certain subscription, whatever is the value they have received during the year, of that value, from the current value of the share, they will divide and provide that number of equity shares to them. So for example, like let's assume Gurmeher is an employee of Bank of America, right? So Gurmeher is, let's assume, has a CTC of $200,000 a year, and every month Gurmeher is depositing, let's assume, $2,000 a month. Every month he is depositing for the subscription of the share, and those subscription are being encashable, or you can say convertible or exercisable at the year end, right? So during the year, Gurmeher has paid $24,000, right? Let's assume at the end of the year, one share of the Bank of America is worth $500, right? So $24,000 divided by $500, that means 48 equity shares. Am I right? Are you
yes
guys
yes
with
sir
me? So
yes sir
the
yes
Gurmeher will be granted those 48 equity shares at the end of the year. That is what the subscription model is.
so meanwhile he'll not be entitled to any
No,
return, right?
no. Once you get the exercise, once you exercise those shares, then after whatever is the profit, for that you'll be getting a dividend, right?
Okay sir, okay.
Or there may be a possibility that company may have a scheme that will pay you, let's say, 6% interest on the monthly subscription you are making. So that means at the year end, you have made, let's say, 24,000 contribution, and let's say $1,000 is the interest on that contribution. So now your contribution plus interest on your contribution is $25,000, and $500 is the price of the stock. That means you are getting 50 stocks. So it depends on arrangement between respective parties or employer and employee who has been participating in the stock subscription plan. So that is called, same way like how we have ESOP plan, same way we have stock subscription plans also.
लेकिन सर स्टॉक सब्सक्रिप्शन आप कह रहे हैं ना कि इट्स अ
Sorry?
पार्ट ऑफ सर स्टॉक सब्सक्रिप्शन जो है इट्स अ पार्ट ऑफ सैलरी लाइक
No. It can be, like there may be possible that they will say like people can subscribe. Like it can be in open market also. So you can also purchase like stock by subscription. So you need to deposit every month, let's say $1,000 or $2,000, and at the year end, once you continuously deposit this money to that company's escrow account, at the year end they will give you the shares based on the current market price. It's not necessary to be. It's not necessary to be employee. For employee, I just just for the ease of understanding, I have given that example. But it can be anyone.
Got it.
Yeah, Prashant, Gurmeer, you guys have any question?
No, sir, no, sir.
Okay. So next one is treasury stock. So treasury stock, like we discussed earlier, is like reacquiring but not retiring of your stock. That means kind of buyback of your shares. Shares are considered issued but not outstanding. So same way, if you remember this example, treasury stock is basically buyback but not issued yet. So you still have this 100,000 shares in your hand. It is back to your authorized share capital but removed from issued and paid up share capital, right? So this treasury stock you can issue in future. So there may be a possibility that after 6 months the price of your share has gone up to $200,000. Sorry, $200 per share. Then you can issue these treasury stocks to fresh shareholder. Make sense?
सर ये कैंसिल भी कर सकती है ना कंपनी, मतलब
Yes. Yeah, you can cancel or you can reissue. That's on completely company's choice.
Okay.
Right? But it is normally, like keeping your authorized share capital slightly free. Right?
Right.
So if you see, there are two methods for the valuation of the treasury stock. First is cost method and second is pre-value method. But both the method generally I've seen like give the same results. So if you see, consider reacquisition and subsequent issue as one transaction. So in the cost method, what you have reacquired and what you are subsequently issued is generally considered as a one transaction, that is called treasury stock, are valued at cost of reacquired. And then second method would be par value method, in which you consider reacquisition of the stock and subsequent issue as two separate transactions, and both the transaction you will be adjusting only the par value and the retained earning separately. So treasury stocks are being valued at the purchase value. So in the first method, so here is an example. If you see, let's see XYZ company has a balance sheet on January 1, immediately after acquiring the treasury share would appear as follows. For example, common stock of $10 par, and the company have 1,000 share of authorized and issued, of which 100 are the treasury share. So that means they have $10,000 is the share capital, right? $1,000 or 1,000 share at the rate of $10 each is the total share. Let's assume they have additional paid in capital of $4,000. So total paid in capital is $14,000, and they have, let's say, retained earning of $60,000. So total equity balance they have $74,000. Let's assume that 10% of it, or you can say 100 shares of it, is 7,400 is the dollar value. So total equity of the shareholder after the treasury stock is $66,600. Whereas if you see that this is the way the presentation you'll be making in the cost method. If you see the same example, same number, same detail, but in the another method which is called pre-value method. Here you'll be having a common stock of $10, 1000 share of 10,000 minus the treasury stock. Here you'll be adjusting from the par value in itself. So you'll be showing $9,000 of your common stock in the balance sheet. Here, if you go to the balance sheet, in the common stock area, you will go and you will see it is 9,000 share. 1 second.
सर ये जो पहले वाला मेथड आप दिखा रहे थे कॉस्ट वाला, जिसमें कि 7400 का हमने वो दिखाया लेस ट्रेजरी स्टॉक एट कॉस्ट, तो दिस कॉस्ट इज जो एक्चुअल मार्केट में उसको कॉस्ट पड़ी होगी 100 शेयर्स की, दैट इज 74।
यस,
बट सर ये थोड़ा मेथड अजीब सा नहीं हो गया कि प्रेजेंटेशन में, मतलब ऊपर तो हमने कॉस्ट पे रिकॉर्ड कर रखा है सब कुछ जो एक्चुअली उसका फेस पार वैल्यू था, और लेस कर रहे हैं जो अमाउंट दैट इज वो वाला अमाउंट जो कि हमने एक्वायर्ड करा। देयर इज डिफरेंस नहीं है, मतलब रिकॉर्डिंग और रिकॉर्डिंग के अंदर मतलब अजीब प्रेजेंटेशन नहीं हो गई है थोड़ी?
से दैट अगेन।
सर प्रेजेंटेशन गलत सी नहीं हो गई क्योंकि आपने कॉस्ट पे रिकॉर्ड कर रखा है, जब आप लेस कर रहे हो तो आप एक्वायर्ड प्राइस पे लेस कर रहे हो। हाउ इज इट दैट कि ये सही है चीज?
वी आर रिड्यूसिंग एट कॉस्ट।
सर जैसे हमने ऊपर लिखा जब $10,000 है तो हमारे वो टोटल शेयर्स थे जो कि पार वैल्यू पे इतना हमने रिकॉर्ड करा, 10 पेड अप, ठीक है ना? उसके बाद भी व्हाट वी डिड इज एडिशनल पेड इन कैपिटल आ गई 4000 की, टोटल पेड इन 14,000 हो गई। अब रिटेन्ड अर्निंग्स उसमें ऐड करके हमारा टोटल जो पूरा शेयर साइड का बना दैट इज $74,000, ठीक है? अब मैं कह रहा हूँ जो ट्रेजरी स्टॉक थे ऊपर जब हमने रिकॉर्ड करे थे 10,000 का पार्ट था, तो 100 into 10 सिर्फ 1000 वैल्यू थी उसके ऊपर ना, यहाँ पे 10,000 में सिर्फ 1000 था उसका कंपोनेंट जो रिकॉर्ड। लेकिन जब हम लेस कर रहे हैं उसको तो हम लेस कर रहे हैं एक्वायर्ड प्राइस पे 7400 पे, तो मतलब वो बेसिकली रिटेन्ड अर्निंग्स को भी कंसिडर करके उसमें टोटल लेस से लेस करके दिखा दिया। प्रेजेंटेशन में मेरे को कंफ्यूजन हो रही है कि ऊपर कॉस्ट पे रिकॉर्ड कर रखा है, जो पार वैल्यू है उस पे रिकॉर्ड कर रखा है, जब लेस कर रहे हैं तो मार्केट वैल्यू पे लेस कर रहे हैं।
No, it's not market value, it's book value.
हाँ, बुक वैल्यू है, इशू वैल्यू नहीं है ये बेसिकली। मतलब $10 का स्टॉक है बेसिकली, ये अगर $10 का स्टॉक है तो उसमें तो हम इनिशियली रिकॉर्ड करा, बट जब हम रिड्यूस कर रहे हैं तो $10 की वैल्यू पे रिड्यूस नहीं कर रहे हैं, रिटेन्ड अर्निंग्स की वैल्यू इंक्लूड करके फिर जो उसकी अमाउंट आ रही है वो रिड्यूस कर रहे हैं।
That is in par value method. So here we are reducing $1,000. It's a par value method.
करेक्ट सर।
The cost method is book value method.
मेरे को लग रहा था इन दोनों मेथड में व्हाट आई वांट टू से इज कि जो नीचे वाला मेथड है वो थोड़ा ज्यादा बेटर प्रेजेंटेशन दे रहा है रादर देन ऊपर वाले मेथड से जिसमें कि रिकॉर्ड 10 पे करके फिर लेस कर रहे हैं 74।
But both you can choose either method.
हाँ, okay.
You can choose either method, so that both the methods are allowable method in ASC.
Okay, ठीक है।
So in this, like you'll be reducing it by par, which you were saying, Ayush, and then parallelly you'll be reducing 10% from the additional paid in capital, and parallelly you'll be reducing 10% from the retained earnings.
Okay, वो actually बाद में कर दिया उसने reduce,
but the output will come same in the balance sheet.
Got it now,
right? So total stockholder equity is same under both the method, whether you are using cost method or par method. The difference lies in the manner in which treasury stock is accounted for and disclosed.
Right.
The disclosure is different, but end result is same.
Same, correct. Okay.
Right? So here we can take like 15-minute quick break, and then we can start at 12:30.
सर इसमें रिटर्न अर्निंग्स में 54,000 ये कैसे आया है? ठीक है,
60,000 minus 10%, 6,000. 60,000 is
ओके,
the
तो उसमें
retained
से
earning.
ओके ओके समझ गया।
So 10% reduced.
10% उसमें से भी कर दिया, और 14,000 था तो उसमें से भी 10% 1260।
Yes.
ओके सर, ये वाला ज्यादा मेथड थोड़ा इजी है as compared to
So you can use either method. So both methods are allowed methods.
ओके सर, ओके।
right? So let's come back at 12:30, maybe quick 15-minute break for a quick tea or coffee.
Sure.
Right, then we will finish this equity today.
Yes, done.